Hey guys, welcome back to Crypto Mischief. Richie here, where I talk about my favorite thing in the entire world. Goddamn cryptocurrency. Still is. Still is. That's right. Today I'm doing a little bit of rebalancing with my concentrated liquidity pools on Crystal and also looking into VFAT, where I also farm. I use these pools, the ones I'm going to be using today, which are actually the external revenue pools for our game, Arbitrum Land. And as I was about to rebalance, I thought I might just do this live to show you how I handle volatility in crypto markets. Because if you are looking at CoinGecko today, you will be seeing a lot of, fear and doubt in the market. And I'm not worried about that. We are just, getting ready for the next leg up, essentially. But it does mean that a few of my pairs have slipped out of range, right? And prompts me to rebalance and check on some charts to see where I think these coins might be going. We're going to specifically be looking at two tokens today, which would be, the first one is going to be ETHFI or ETHFI with ETH, because I've been farming concentrated liquidity pools for that for a while because it's been doing very well. And now I need to examine my position with it and where I think it's going to be going in the future, because there has been a significant decline in the price of it, right, in the past few days, which put me out of range. So let's get straight to it and check out what's going on. We are, we're on CoinGecko. We're seeing volatility, right? Bitcoin has floored out around 97,000. ETH almost hit 4,000, and now it's declined down $300, which is like 3 or 4%. But this decline in Ethereum, because we're mainly talking about Ethereum pairs today, because that's where I'm farming with the pools for Arbitrum Land, then a lot of these ETH pair tokens, which I do farm with, the Ethereum narrative, right? They have really taken quite a hit, quite a chunk, right? So, off question, we can come to Arbitrum Land here, and if you scroll down arbitrumland.com, okay, link in the description, you can see where our concentrated liquidity pools are. The way that this works is Arbitrum Land is a game where you deposit Ethereum on Arbitrum chain and you get up to 1.3% daily. Okay, it's a high risk, high return ROI game. And I know if you're watching this video, you're probably not into ROI dApps, but we created it and it's doing well. So the way it works is, of course, it's Ponzi-nomics, right? People invest into it, then they earn on their Ethereum that they put in, and then they claim out their Ethereum, okay? But on the back end, what I did at the very launch of this is I started building some concentrated liquidity pools to act as injections to sustain this for longer, and also to sharpen my skills as a yield farmer, because why? Well, like, what's better than using, like, these are my funds as well that I'm using for these pools, but I thought because something's actually on the line, I can start to treat it more like a business as opposed to a hobby, because these funds in the pools are my funds, and two, I want Arbitrum Land to be successful. So I made sure to do this, as seriously and, mathematically as possible. Okay. So you can see we've got a bunch of pairs here. All of them, apart from one, Pack of Finance, is on the Binance Smart Chain where they handle the yield. But all the other ones, these are me handling the yield with Ethereum based coins. Okay. And most of them are on Arbitrum chain because they have cheaper fees. In terms of Arbitrum Land, how are we doing? In case you're interested, the TVL is still keeping stable with 11.5 ETH. You see I have $178 to claim today. From my 1.2 ETH deposit, I've now claimed out 0.72 ETH, so we're more than almost 60% ROI on this already. It's only been 2 months. It's a beast. It's an absolute beast. But anyway, that's what happens in the back end. You know about this. I made videos about it and stuff. So we can come in and we can check out what's going on. So for example, I have a pair here. This is my ETH and ETHFI pair on Crystal. Okay, so I've just zoomed into this pair here. Now I need to rebalance because my pair has gone out of range, and when we go out of range, we stop earning fees. What does that mean? So we come here, this is the ETH to ETHFI, right, chart. So it's the price of ETHFI in comparison to ETH, right? We can see, like, since I've been farming, I went back quite a while, from about here when we started about a month ago farming with ETHFI, and we've seen a continuous rally in the price of ETHFI token in comparison to ETH. Okay, it's been doing really well. And the reason I liked farming with this one, and I still am, is because although it's been doing better, it's not been doing massively better. They are generally going up in tandem with each other. I can show you, if we take from this point where I started farming with it, up until this recent decline, it was up 30, 40%, okay, on the price of ETH, which is very manageable for yield farming over the space of that is, yeah, that's a 30-day window there, right? So it's very manageable to deal with that because my range that I set was usually about 10% either way. So it just meant 1 or 2 rebalances over the space of a month, which is fantastic, okay? But volatility happened, right? Huge volatility happened. And this would be this sell-off here where we went from 3 zeros and 7 all the way to 3 zeros and a 6, okay? And that's a significant decline, and it did bump me right out of range for my position. So coming back to my position, which is this here, I need to rebalance, okay? And I'm going to use the first strategy that we're going to talk about here, which is called the Snuggle. That's right. There is a concentrated liquidity method called the Snuggle, a little snuggle, okay? And I found this in the R34P DAO, where I have a couple friends where we all hold that token and we get access to this DAO that we talk in, right? And I started studying it. The best video I found on it was from the YouTube channel called Crypto Labs Research, who are pretty good. I believe they also run their own business where you can pay. They have a paid sponsorship and stuff. I'm not in any way affiliated with them, but I quite found this video pretty good. So they have a lot of information on yield farming that you can find for free on YouTube, or I guess you can pay and you can get even more information, right? So they're talking here about the Snuggle, and I started, thinking, okay, I can do that. I can figure this out. So we'll go down to this. Okay. So as you see, generally, I was plotting along this line and everything was going very smoothly with my predictions for where the price of ETHFI in comparison to ETH is going to go. Because essentially, that's what concentrated liquidity farm breaks down to. Can you properly predict the price of an asset in comparison to another asset while this, while going into the future? If you can properly predict it, then you set your ranges within that, and then you will continuously just earn fees, right? We come here and look down at what's going on. We're seeing a lot of selling, a lot of buying of ETHFI. But the good thing is, with every single sell and buy of ETHFI with ETH, coming into this DEX, this is all earning fees for liquidity providers because this is Uniswap, right? So that is a great thing. Even sells or buys, red days or green days, there is concentrated liquidity trading fees to be made, right? So that is something to always remember, okay? But now I'm a little bit more bearish on the price of ETHFI because of this big red candle, right? And I need to replot where I think everything's going to go. So I'm going to take it back from the probably here, right? And we start to kind of pull a line and you think, okay, I could be hopeful and think, oh no, it's just going to continue where it took off, but I don't think so. So I think that we will continue to see upward trajectory, but I think it will take a good while to get back and recover to that general ETH price, okay? I don't foresee any giant red candles coming up in the short term. I think we have at least another week or so of this kind of choppy motion, okay? So therefore, I'm going to set my pair, rebalance my pair within that idea. Now, the Snuggle is the idea that if I've already decided that I think ETHFI will regain in price, but not massively, but slowly, right? Then why would I set my range to the lower side in a more bearish fashion, right? Why not just get as close as possible to that bottom line for ETHFI in comparison to ETH, and then as we grow, right, in token value, then I would DCA fresh ETH into the position, right, by the price of ETHFI gaining in comparison to ETH, right? That would then mean that my ETH that I deposited in would have bought more ETHFI because of the range that I've put with the pools, okay? But as the price goes up, right, as this line continues to go up, that ETHFI will be changed into ETH, right? Therefore, I'm DCAing into the pair. My pair is raising value, but I'm also dollar cost averaging out of ETHFI and more into ETH once again, right? This works best if you're, of course, deploying stables into it, because then, of course, you is win-win, right? You have more ETH, you have more ETHFI. For this, so because I've got some ETH on the side, I'll be depositing the ETH in, which will be buying myself more ETHFI. But then as the price goes up, I will be taking that ETHFI and it will be automatically changing in the liquidity pool with that range set into ETH as opposed to ETHFI. I hope that makes sense. It is quite complex. Definitely, I would say that these guys over at Crypto Labs probably said it better than me, but we're going to get to it and just go with it. So I'm going to get my ledger and we're going to move over to VFAT tools. So this is where I decided on my range. So you can see I put a very small 3% down turn. That would be the snuggle, right? I'm snuggling as close to the bottom line as possible because I think that the prices will start recovering. The ETHFI price will start recovering in comparison to ETH in the next week, okay? Now, if I do this, right, we can see here 3.34%, right, under, right? That's very close. The chances that ETHFI might slip under that range are pretty high, okay? And if that happens, what do I do? Well, I'd have to rebalance again. But I continue to rebalance in small increments, okay? So then I would bring this down, another couple percent, bring the 10% down with it, okay? So just moving my range slightly. And as we begin to raise, as the price of ETHFI in comparison to ETH begins to raise, then eventually I would move my position to more of a 50-50 sweep, okay, to get back into general market conditions, okay? So this is how I'm experimenting, right, with volatility going for this, right? You can see at the moment it's all in ETHFI. So by doing this, we're going to change it from having the new position, will put it mostly in ETHFI. We would have 74% ETHFI and only 26% ETH. But as ETHFI starts regaining position, this liquidity, if it all goes to plan, would start moving less, and the ETH pair would start being more. So then I'm using the chart momentum of moving up to DCA out of ETHFI and more back into ETH. Because of course, what do we want generally? Do I want ETHFI or ETH? I want ETH. I'm using ETHFI. I'm using and abusing it to get the yield that comes from it, because the APR that you get from ETHFI and ETH is fantastic, actually. It's very great. So we check again, and we'd be coming down to like the 6.3 zone, which would be generally around about here. We could see, we might see some choppier movement. We could be coming down like around about here, right? So then I would be going out of range. So sitting around about the 6.35 zone is, I think, a good enough snuggle here for this strategy. So we come there to 6.35, which is exactly that. So 3% down, 9% to the upside, and we will confirm that. Okay, so now we're back in range with ETHFI and ETH. And sitting with that snuggle position here. So the second thing I want to do just before we move on to this top 2 strategy is to come here, and we're just going to DCA now. So I'm going to take 0.1 ETH and put this in. So we're taking DCA another $350 into the position and zap it in. So you can see from this, I'm going to be buying more ETHFI than ETH with my ETH coin, right? So essentially I'm DCAing into ETHFI token with the plan that ETHFI is going to be going up in value in comparison to ETH, right? So it's about 50%, 30% more, okay? So we come in with that and we zap in 0.1 more ETH, okay? To grow the pair, increase our passive income from this, which I can then use to continue to fund Arbitrum Land with more juicy ETH. We're almost up to 1 ETH injected, which is awesome. Like, I'm really happy with the way this is going. It's a good learning experience for me, and it helps my community to have a little ETH printer on the side. I hope you enjoyed a little catch up on liquidity farming and my kind of attitude towards dealing with concentrated liquidity. What do you do? Any strategies? Let me know in the comments. And as always, be good to each other and don't get wrecked.